Once took over an account that was paying workers' comp on 2.5 million in payroll, and within a few weeks, we reduced the cost by about 80%. No new carrier, no negotiations, just fixing one thing that almost no one pays attention to. In this video, I'll show you how workers' comp class codes actually work, why they can quietly drive your costs way higher than they should be, and how to make sure your business is classified correctly so you're not overpaying. Imagine two businesses doing almost the exact same work, same number of employees, same payroll, same level of experience. But one of them is paying twice as much for workers' comp as the other. Not because they have more claims, not because they chose a bad insurance company, but because of how their employees are classified. And here's the crazy part. Most business owners have no idea that this is even happening. And that difference comes down to one thing: class codes. Now, most business owners think their workers' comp premium is based on the insurance company they choose or how good of a deal they can negotiate. But that's not really how this works. At its core, workers' compensation is just a math problem. Your payroll gets divided into different categories. Those are your class codes, and each one of those class codes has its own rate. So instead of one price for your whole business, you actually have multiple prices stacked together. If you've got office staff, they're priced one way. If you've got field employees, they're priced another way. And if you've got higher risk work, that gets priced even higher. So your total premium is just all of those pieces added up. And here's the part most people miss: you're not really buying one policy, you're buying a bunch of little policies based on what your people actually do. And this is where things start to get tricky. So here's where this really starts to impact what you pay. Let's say you've got an employee who does more than one type of work. This happens all the time in construction. Maybe you've got someone who does plumbing, but they also do a little bit of HVAC, or someone who does interior carpentry, but occasionally gets up on a roof. From a business standpoint, that makes total sense. You want flexible people. But from a workers' comp standpoint, that's where things can get expensive. Because in many cases, if an employee does multiple types of work, their payroll doesn't stay split up between those categories. It often defaults to the highest rated class code. So now instead of part of their payroll being priced at a lower rate, all of it gets pulled into the more expensive category. And this is where business owners get blindsided because you think, well, they only do that higher risk work sometimes, but the way the rules work sometimes is enough. So now you're running what you believe is a remodeling business, but what you're being priced like is a roofing company. And it gets even worse if you're not tracking this the right way. And the reason this happens is pretty simple. Most business owners assume that once their policy is set up, it's correct. They think my agent handled it. The insurance company approved it. So this must just be what it costs. But workers' comp doesn't really work like that. These classifications are based on a set of rules: how your business is described, how your payroll is assigned, and what kind of documentation exists to support it. And those rules leave room for interpretation. So if nobody's actually or actively looking at it, if nobody is comparing what you actually do to how you're classified, you can end up in the wrong category without ever realizing it. And here's the important part: this isn't actually or usually a small mistake. When classifications are off, you're not just slightly overpaying, you can be dramatic. Let me show you what this actually looks like in real life. I took over an account for a mental health program. They had about $2.5 million in payroll, and every single employee was classified under a home health care code, which on the surface might have sounded reasonable, but when we actually looked at what they were doing, it wasn't the right fit. They should have been classified under a doctor's office code, and that code was about one fifth the cost. So what I did was take their most recent audit and go person by person. What do they actually do? Where do they work? Does it match the rules for this classification? And then I made that case to the underwriter. No shopping, no new quotes, no carrier change, just aligning the classifications with what the business actually was. And in doing that, we reduced their workers' comp costs by about 80%. Nothing about the business changed, just how it was classified. So here's the takeaway from all this: There's a really good chance this is happening in your business right now. And if it is, the solution is not getting more quotes. It's not calling five different brokers and hoping someone comes in cheaper, because if the classifications are wrong, you're going to be wrong in every quote. The real opportunity is making sure your business is classified correctly in the first place, because even small portions of payroll assigned to the wrong class code can have a massive impact on what you pay. And that's just how the math works. So, what should you actually do with this? First, look at your current class codes, not just the names, but what they actually represent. Then compare that to what your employees really do from day to day. Are people doing multiple types of work? Are roles mixed together? Does the classification actually match reality? Next, look at how that payroll is being tracked, because if you're trying to split payroll between different types of work, you need documentation to support it. Time cards, job tracking, something that clearly shows where time is spent. Because if you can't prove it, you can't use it. And that's where a lot of businesses lose the ability to separate lower cost work from higher cost work. And finally, you need someone who understands how these rules actually work. Not just to quote a policy, but how to structure it correctly and explain it to an underwriter, because that's where the real leverage is. This isn't about finding a cheaper insurance policy. It's about making sure the system is working the way it's supposed to. Because once this is set up correctly, that's when shopping actually starts to matter. Now, if you want to take this a step further, there's another area where I see businesses overpaying for workers' comp all the time, and it has to do with how you classify your people as 1099s versus W 2 employees. Because just like class codes, there are rules around this, and if you get it wrong, it can quietly drive your costs way up. So if you want to understand how that works and how to avoid it, click right here and watch the next video, 1099 versus W2, the workers' comp cost trap.